Hello everyone, Freemantle here. Today I want to look at a TV commentator's take on payday loans. A payday loan is a very short-term loan, normally to be paid back on the first payday after you take it out, hence the name, payday loan. The annual percentage rate is very high, not to be confused with the amount of interest a person actually pays, because these loans aren't made for a year, they're very short-term. But you pay relatively a lot of money to borrow money from this source. A borrower is typically assessed fees if he doesn't pay off the loan on time. And often, maybe in every case, I don't know, a borrower can take out another loan after he pays off his current loan. So far, nothing unusual here except the very short term of the loan and the high interest rates. A final point about payday loans: some people repeatedly take out payday loans and get very deeply into debt. I've not been able to find out if this is generally true in the lending industry. I'd surmise that if a borrower goes deeply into debt by borrowing, he wasn't a very good prospect for the loan in the first place, but I don't know what the situation is across the financial services industry. Recently, I chanced across a YouTube video about payday loans, and I've placed the URL for it below this play window. It features a TV commentator, whom I know nothing about, named John Oliver. I suggest you watch his video, then return to mine, the video you're now watching, in order to get a better sense of my comments about it. Mr. Oliver does not like payday loans, or the people who make them, or the industry they constitute. He warns against overgeneralizing about the industry, which he then generalizes about using a scatological term. I take it the irony is supposed to be humorous. And below the YouTube play window for his video, he uses a word to say unambiguously that the industry is really bad. Here's a different take on payday loans. My take. Well, what's wrong with payday loans? A person can figure out whether he needs a loan. He can look over his options. He can find out the payday lender's terms. He can decide whether the high interest and the fees, whatever they are worth it to him. And he can make a decision about whether to take out the loan. And if he doesn't understand the terms or doesn't like them, he can walk away. Where's the problem? Well, if Mr. Oliver thought that way, the way I do, he wouldn't attack payday loans and payday lenders the way he does. So he must have a different take on the situation. He and I wouldn't quarrel when he says payday loans are very short term, high interest, fees assessed if the loan not paid back on time. Those are just facts about what a payday loan is, part of the definition. He doesn't say the high interest rates and additional fees are being concealed from borrowers by the payday lenders. That would be a reason for criticizing payday lenders. Sounds to me like it'd probably be straight out criminal fraud, but he doesn't even suggest that the lenders are doing that. So he and I wouldn't quarrel there. Some borrowers get deeply into debt, he reports. Now here we have a different kind of complaint. Short term, high interest, and fees assessed are about what lenders do. Get deeply in debt is about what borrowers do. He shows clips of 4 payday borrowers reporting on their experience. The following is the entirety of what the customers say without reproducing the clips or quoting them. Borrower number 1 names the amount he went into debt and says he came to the loan office every payday. Number 2 says every time she paid off a payday loan, she'd get another one. Number 3 refers to repeatedly borrowing and repaying and borrowing again. She starts to give some words of wisdom but seems to be cut off. She doesn't finish the sentence. So she only refers to repeatedly borrowing and repaying. Borrower number 4 quotes dollar figures for the amounts he borrowed, thought he would pay back, actually paid back, and what he could have paid back had he not taken steps. We never learn why any of the first 3 people kept taking out payday loans, why they got deeply into debt, or whether they got deeply into debt because they kept taking out the loans. We never learn why borrower number 4 didn't know how much he'd have to repay. As I said, Mr. Oliver doesn't suggest at all that the lenders are concealing the terms of the loans, so it's unclear why we should think the lenders are at fault because number 4 didn't know the repayment amount. But Mr. Oliver does have an idea why the first 3 borrowers got deeply into debt, it seems. He quotes a well-known slogan for a brand of potato chips to suggest that a borrower can't resist taking out repeated payday loans. And later Mr. Oliver says payday loan ads are ubiquitous, not his word. Now here I can quarrel with him. My take on payday loans, I said, is that a person can figure out whether he needs a loan. He can check out his options, different loans, different lenders maybe, find out the lender's terms, decide whether it's worth it, and he can make a decision about whether to take out the loan. That's just ordinary prudence, I say. It's common sense. So I say if a person doesn't figure out in this way whether to borrow money, it must be because he can't do it this way. He can't act prudently, cautiously, or well-informed. And Mr. Oliver's complaint about payday loan commercials being ubiquitous, that certainly is bad news for people who just have to buy something because it's advertised a lot. Every vision for society has a picture of the people who are going to live in it. What's the liberal's picture? He has a very clear one, which I mentioned in other videos. It bears repeating. On the liberal view, ordinarily rational, intelligent, knowledgeable adults are stupid, easily manipulated, impulsive, impressionable, and lazy thinkers when they think, which they don't do much of the time. This is Mr. Oliver's picture of people, when it comes to payday loans anyway, because if he didn't have this view of payday borrowers, and thought instead that they're ordinarily prudent, cautious, and well-informed people in sizing up their need for money and taking out a loan, he would not have the complaints against payday lenders that he does have. The liberal believes that at a very basic level, the ordinary person is inadequate for living, so that it's never reasonable, and it's often cruel, to treat an ordinary person as though he can make a pretty good go of life and his challenges just acting out of his private resources of thought and action, for example, in deciding whether to take out a particular loan. No, he can't, the liberal believes. He has to be supported and protected by, among other things, rings of regulations around and through businesses he deals with. And where there are skimpy regulations or none, as Mr. Oliver suggests about payday loan companies, that situation should be corrected. To his credit, and for whatever reasons, Mr. Oliver notes toward the very end of his video, a survey in which a majority of payday borrowers said the loans give relief. To judge from this remark, most people who borrow from payday lenders, the average person who does, successfully thinks his way through the snares, whatever they are, and the drawbacks, and improves his financial situation by using payday loans. But I wouldn't say Mr. Oliver is retracting anything he said. His analysis and his complaints are about how payday loans work as a financial instrument. He doesn't say or imply that no one has ever benefited from taking out a payday loan. So, to give him the benefit of the doubt, he's complaining about some of the results he claims payday loans have. Again, I suggest you watch his video for yourself. From today's video from me, 2 takeaway points. The liberal has an extremely low opinion of the average person. And what kind of society, what kind of government is necessary if people are like that? Thank you for listening.